Bank and give us the opportunity to contribute to its annual Congress. This is really a wonderful opportunity to connect as a community of PPP professionals on such a critical but also timely topic. My name is Fatouma Toure Ibrahima. I'm the practice manager in charge of PPPs at the World Bank, and I'm pleased to moderate today's discussion on PPPs in times of crisis. We all know that policymakers, private sector representatives, experts, influencers, and other key stakeholders all face the same challenge of making decisions in a context of crisis and sometimes overlapping crisis. We therefore wanted to bring the discussion in this forum and hear your perspective. Let us mention a few numbers. I think that will help us set the stage. The World Bank's database on private participation in infrastructure, which tracks private investment, including PPPs, in infrastructure, show that the percentage of private participation in infrastructure decreased by 61% after the '98 financial crisis. After SARS outbreak, this number was at 24%, and then 40% after the European debt crisis. Most recently, the COVID crisis resulted in a 48% decrease in private participation in infrastructure. So we all know that these crises bring complexity at different levels, and we will not be able to address all these issues in one session. So we have designed the event as a 90-minute moderated discussion in 3 parts. First, a live discussion, followed by a moderated discussion with the panel members, and then the Q&A. So without further ado, let me invite Imad to kick off the session with a live chat. Imad Fakhoury joined the World Bank as Director of Infrastructure Finance, PPPs, and Guarantees in 2019. He comes most recently from the IFC, where he held the position of Senior Advisor for Private Sector Solution. Before joining the World Bank, Imad served as Minister of Planning and International Cooperation, Minister of Public Sector Development, and Minister of State for mega projects, which included PPPs, of course. So these positions has allowed Imad to see multiple types of crises, including actually designing response plans to refugee crisis. So we have the right interlocutor today to help us set the stage. So Imad, thank you for agreeing to frame this discussion. And I would like to start by perhaps mentioning that as countries begin to recover from the economic and health impact of COVID-19, many are turning to PPPs. So to support our collective ambition to develop greener PPPs, I would like to ask you to tell us how the COVID crisis impacted PPPs under operations. So over to you, Imad.
Fatouma, thank you. A great pleasure and honor to be with such a distinguished panel and such a great audience. A big thanks to WAPPP for the great annual event that's unfolding. We have seen actually over the past 2 years how a lot of uncertainty was brought by COVID and how it kind of impacted and affected PPPs. As you mentioned, Fatouma, we saw in 2019 a phenomenal 52% decline, and we had about 252 projects with private participation and investment for an amount of close to $46 billion. This number in 2021 had improved, so we saw an interesting rebound, about 240 projects with 76 billion almost in total investment. That represented a 49% increase from the 2020 level. However, it's important to understand that this is still about 12% lower than the 5-year average we've seen for the private participation in infrastructure database that Fatouma, your team actually, and our team leads on. We've seen how COVID impacted PPP operations, right? So it caused low growth, macroeconomic volatility, supply disruptions, added health and safety regulations. caused declines in user demand. That in itself caused currency volatility or service standards, compliance risks, inflation, supply chain disruptions, which reduced access and increased costs of credit, service delays, public sector or entities not being able to make payments. And that in itself generated impact on PPPs, liquidity problems for the project companies, some defaults to lenders, insolvency risks, or increased costs. All of that potentially can or caused in some instances project default or failure. So the pandemic had significant impact on operational PPP, especially in the transport sector. But luckily, it did not lead to widespread cancellation of projects. And majority of countries actually resorted to resolve the impacts of the pandemic on a project basis, and sometimes some of them dealt with it on a sector level. And this clearly suggests to many of us who know that the PPP contracts are actually relatively robust and they are flexible. They can enable parties to resolve these issues resulting from the shocks. And even if one looks at the sophisticated PPP markets, we've seen how governments even resorted to change legislation or bring in administrative measures to help and provide transparency and ensure a level playing field in the treatment of projects across the sector. And we've seen different kinds of actions being taken by governments, some which depended, I guess, on the severity of the impact. They range from adjustments in time or relief in penalties and certain obligations to potentially more substantive financial support if it was judged to be important and continue to represent value for money for governments. I would finally maybe close by mentioning few takeaways on these government actions based on the great work that we've seen our teams do in looking at case studies and examples. And I want to thank also the Public-Private Partnership Investment Advisory Facility for some of the great work and the PPP team at the World Bank for doing that. A few takeaways: the importance of early identification of stress points, the importance to find an agreed upon approach that builds on the mutual trust and has the necessary transparency, and with the understanding that the pain and gains have to be shared between the parties. The importance of being proactive and governments that were proactive handle these situations better. The importance of involving all the relevant parties. The importance to focus on time-bound or actions that are temporary in nature that were addressing the impact of COVID specifically, so in future shocks. And finally, the criticality of not to take unilateral action, because that undermines the government's position in negotiating with the PPP counterparties, or even worse, it could create some breach of obligations under these contracts. Back to you, Fatouma.
Thank you very much, Imad, and thank you for sharing more numbers, and the emphasis on transport is really important. I would like to maybe twist the question a little bit, because this question was mainly focusing on PPPs and the operation. So we know that the conversation can be different when we talk about the pipeline or projects in preparation. Any additional perspective you would like to share on that?
Sure. That's a very important question, Fatouma. And we know that the pandemic actually caused delays, cancellations, and changes to PPP projects that were in the planning and the procurement stages, which actually led to the numbers you and I mentioned, to the overall decline we've seen in 2020. It caused delays in the procurements and actually forced many governments to revise their priorities and maybe shift the focus on better pipeline development and re-looking at the actual project preparations under the new circumstances. And obviously now we see the recovery in pipeline and project development. They all have restarted in last year well after the dip in 2020. And we see how many governments right now see PPPs and private investments in infrastructure as a critical part of their post-COVID recovery from the pandemic. Interesting enough, maybe just to share some numbers, the World Bank's PPP group team actually used some artificial intelligence and looked at infrastructure projects and cancellations in emerging markets and developing economies. We've seen during the early stages of the pandemic about 307 projects actually that were delayed or canceled, and the peak actually reached in April 2020. This is obviously looking at all of 2020 up to the May 2021. So what have we seen? We know that the infrastructure gap and the need for resilient infrastructure is going to increasingly require private finance as well as new technologies. But the COVID-19 impacted the PPP revenues and risks appetite. The liquidity is not the constraint. It was actually the bankability of projects. So for projects under preparations and procurement, it was very critical that we attract strong sponsors and finance. It was important. Several governments actually adapted the PPP models and looked at specific approaches to risk allocation and project revenue generation and government support mechanisms as a whole. So we saw some governments that actually strengthened the PPP legal framework. They were actually focused on maintaining the economic balance, looking at opportunities for step-in, how to make projects more resilient to external shocks, ensuring that the PPP model is more flexible in risk sharing and project structure, and providing more flexibility for government financing and support mechanism, as well as reviewing and strengthening methodologies for risk assessment and management. Other governments actually looked at new or updated PPP pipelines, and they announced them. And it was a proven way to kind of generate investor confidence and interest in the market. And few final takeaways on procurement, specifically projects under procurement. It was very important actually to review the financial forecasts and all the assumptions based on the user demand to determine actually if the project still remained viable and affordable. And there were important provisions of PPP contracts that needed actually to be relooked at, from force majeures to MAGA to changes in law to exceptional events that impacted the projects and to the restrictions that have been imposed by governments. And maybe the critical point, the importance, the governments that did well actually were regularly communicating with the market on their plans, their timetables, to manage properly expectations. And finally, many governments actually chose to involve more international development banks to help in some of the funding gaps, as well as to support better the project preparation aspects.
Thank you very much, Imad. We have two questions that came in the chat. The first one relates to whether it's time to define force majeure in PPP contracts, and the second relates to the way private operators take advantage of renegotiating certain clauses of the agreement. I think these questions will be easily folded in some of the questions that we will ask Andrew later on. However, I want you to come back to you, Imad, and really mention, the guidance to governments and what are the lessons learned that can support our ambition for greener PPPs in times of crisis. So in 1 minute, Imad, if you want to close this first part of the conversation and share these views.
Listen, Fatouma, PPPs are and attracting private investments is going to be critical to deliver on a green recovery that actually accelerates the transition to zero for all the reasons that we've mentioned, the financing gaps, and as part of the recovery plans, there has been some key lessons actually looking at the past 2 years. Maybe let me mention a few of them. The importance of mobilizing private investment is crucial, given what we see in public budgets becoming constrained. the importance of having well-structured, well-balanced PPPs and being fiscally responsible is more important than ever. In a post-COVID recovery focused on a green, resilient, inclusive recovery, it's very important not to sacrifice quality over quick wins. It's also very important to understand that successful PPP programs actually is a reflection of the country's macroeconomic context, the capacity levels, the level of competence, and the political environment that is conducive to private business. So investing in institutions is very crucial. The importance to find strong partners through competitive, transparent processes that focuses on quality, crucial for us. And these were key takeaways in the success story. And the importance of transparent and good faith communications were fundamental in the success story. Important to regularly report, to have good contract management, early warnings, audits and verification systems, alternative dispute resolutions, working well with development partners, accessing support from platforms like the PIAF, the Global Infrastructure Facility, and so on, and focusing actually on the fiscal commitment contingent liabilities, capacities, frameworks that need in essence, to be built in. These are, Fatouma, key takeaways that we know that are going to be important for, designing infrastructure programs that deliver on the SDGs and the Paris commitments that help us attract private sector, which is more crucial than ever, so that we can have a green, resilient, inclusive recovery going forward. And finally, very crucial to focus on that projects are well planned, well prepared, and putting the necessary time and efforts and investments into these processes.
Thank you, Imad, for your insights on the challenges and pressures created by COVID-19. And thank you for sharing the actions that government can take to emerge from a crisis. What I really take away, in addition to the transparency points, the contracts, the early warning systems, is really the strength of the partnership on both sides. So thank you very much, Imad. I look forward to continuing this conversation. And after this inspiring live chat, let us now turn to our four panelists, whom I'm going to introduce really in the order in which they will be answering the questions. So Gisele Saralegui is Global Climate Head at IFC PPP Advisory. Gisele has been working with the IFC for over 15 years. She focused on emerging market, private sector debt and equity sustainable finance solutions, where climate change and environmental, social, and governance are at the forefront of their finance and advisory strategic approach. And then we will have Jemima. Jemima is a program manager for the Public-Private Infrastructure Advisory Facility. You all know PIAF, a global multi-donor facility dedicated to strengthening institutions for private participation in infrastructure and enable finance for subnational entities as well. Gemma has actually co-authored the practice note on assessing the impact of COVID-19 on operational PPPs. Then we have Ousmane Diawara, who's a Senior Manager Infrastructure Advisory at EY. Ousmane is helping its public and private clients in the development and financing of infrastructure projects with a strong focus on resilience, sustainability, and improving the quality of living of population. So this is an objective that we also share. And then we have Andrew Orr, partner at Dentons law firm. Andrew is partner in Dentons energy, transport, and infrastructure practice. He has more than 25 years experience advising on major projects throughout the UK and internationally, helping clients develop and finance infrastructure, including procuring complex commercial contracts. He's particular experience in PPP projects, and he has experience across a broad range of products. So welcome to our panel. Let's start with Gisele. So we will have 40-minute moderated discussion, as we mentioned earlier. We'll hope to have 3 rounds. So if you can keep your responses concise, that will allow us maybe to go to a third round. So Gisele, as you know, the majority of emissions today is associated with carbon-intense infrastructure, particularly in the energy and transport sectors. However, countries will need to make significant investments over the next decade to build and rehabilitate aging infrastructure to meet the increasing demand. Many of the risks associated with climate change will be felt by developing countries, as their ability to prevent and respond to the impacts of climate change is comparatively limited. Against this background, how can climate-smart infrastructure solutions be prioritized? And what role do you see PPPs play? So over to you, Gisele, and if you want to quickly maybe set the stage, that will also be helpful. Over to you.
Thank you, Fatouma. And I'd like to build off of the global context that Imad was beginning to set, because I think that's really critical to better understanding climate smart solutions and how PPPs fit in with that. And I think it's interesting to hear and understand that there's an estimate of over 3 trillion of annual investments needed to meet Paris Agreement goals. It all seems a bit daunting. Public budgets already strained by COVID pandemic cannot begin to cover these needs. Private funds and investors will be needed to fill that critical gap. And the stark reality of climate inaction was really crystallized more recently in a Swiss Re report, The Economies of Climate Change, which quantified the economic impact, showing that world economy stands to lose 18% of GDP by 2050 if no action is taken on climate change. We simply cannot afford not to act. Climate smart infrastructure and public-private partnerships are critical to our global future. I can't emphasize that enough. The World Bank Group and IFC recognize that critical importance of the challenge before us, and we are committed to making that difference on climate change. Last year, the World Bank Group made a bold statement with an increase in new commitments under the Climate Action Plan approved by the board. This included Paris alignment, increased financing commitments, commitment to developing new tools and diagnostics. And we are continuing to work actively with our clients, both public and private, to find climate smart solutions to create a just pathway to this decarbonization challenge, and to do so across sectors, and build the climate adaptation needed to address the climate impact that we're seeing globally as well. This includes developing new solutions from PPP advisory to finance to new tools and diagnostics. I'd like to call out something that we've been working on very actively, which is our new PPP climate toolkit for infrastructure. And it's going to be followed by sector level toolkits. This is intended to support governments as they look to translate Paris Agreement commitments, their nationally determined contributions, NDCs, into viable pipelines of climate smart investments and PPPs. We are already working in this space, and let me just give you one example. For example, our PPP advisory services continues to focus on advancing climate change with renewables. And in India, where the Prime Minister formally announced a net zero target at COP26, he also scaled up short-term climate commitments. We are now working on mandates of some 10 gigawatts of renewables to support this vision and goal. When we work on renewables at the state level in India, we focus on the big picture, offering officials at all levels support in the climate vision through solar auctions, for example. With 10 gigawatts of, we really do move the needle a couple of degrees, which is critical in a country the size of India. But we're working well beyond India and have made significant advances in our scaling solar program, which kicked off in Africa and has expanded to countries such as Uzbekistan. but clearly to really bring in that public-private partnership, which is so key. We have a confluence of actors, and I think it's important to call this out because it really sets the stage on the priorities here. First of all, we're seeing regulation and financial disclosure requirements driving climate change focus and prioritization. You see that from the SEC, from a new ISSB, from the EU, certainly. Private companies, investors have emerged as major players promising to adopt ambitious emissions. And you see, interesting enough, let me just throw some figures out at you. 30% of the 2,000 largest publicly traded companies in the world have promised to achieve net zero emissions by mid-century. Moreover, we're also seeing a notable development post COP26, which is an announcement that more than 450 financial institutions representing over 130 trillion in assets committed to reach a net zero by 2050. Sustainable and climate finance is a burgeoning market with over 1.6 trillion raised last year and expectations that it's going to be surpassed this year. This is really remarkable. And it really builds on the question of how do we channel this money effectively into emerging markets, structuring climate smart, viable, and bankable pipelines of projects, PPPs, to attract private sector and finance. We all, at the end of the day, need to come together as stakeholders to achieve the Paris Agreement goals of keeping the global warming to 1.5 degrees. The Swiss Re report really highlighted the stark reality. And we're, I think, bringing in PPP advisory work and financing to achieve this climate future, working actively with clients, financing partners, donors, and beyond, is certainly at the forefront of what the World Bank Group is doing. It's critical to find those solutions. So just a quick summary, Fatouma. Thank you.
Thank you very much, Gisele. Thank you for referring to the recently completed toolkit and provide some examples. I like the point you made about, that we come as a confluence of actors, and that's, the importance of strengthening the partnership. When we discuss PPPs in the bank, we often emphasize infrastructure because of the size of the projects, but we know that infrastructure alone will not provide overall climate resilience. So infrastructure investments need to be met with supported policies that work towards the same goals. So I would like to turn now to Jemima and really, Jemima, get your views about some examples of relevant policies that have helped build up the climate smart PPPs in emerging and developing economies following major crises.
Thank you, Fatouma. Hello to you and to my fellow panelists, and hello to the participants of this session. Now, absolutely, Fatouma, that first of all, maybe to say why it is important to have complementary policies, right? So if we think about GHG emissions, energy accounts for 3/4 of greenhouse gas emissions, but 1/4 of this is coming from the use of transportation, and about another 60% of that is coming from how we develop urban infrastructure. So even within infrastructure sectors alone, convergent policies are necessary. So we're not going to tackle it if we have conflicting policies across these different sectors, if we have subsidies for certain types of investments or certain types of consumption versus another, and say that we will be achieving our greenhouse gas emissions reductions. Also, I think a point that Gisele made already is that failure to make any timely investments in mitigation today means we will have to invest more in adaptation and resilience in the future. So again, another reason why policy choices are important. So maybe a starting point for good policy, and maybe it's quite obvious, is sorry, I'm hearing myself in an echo. Thank you. Is really to better align with the international policy commitments. So meaning the Paris Agreement, the different hierarchies of documents under that, the nationally determined contributions, national adaptation plan, and the long-term strategies. When we speak about the harmonization of policy choices, these kinds of processes help us or help countries look at their development agenda more holistically. I think points to raise why countries should think about this already. Some of them raised by Gisele is that number one is that financial institutions are moving this way. So both the private and concessional development financing institutions have made commitments to really flow their finance through in support of the Paris Agenda. Number two, because financing will seek good quality projects. And so when we speak about what Gisele said, trillions of dollars being unlocked, that's really towards more sustainable type of infrastructure. So if you're a country that's thinking about how you're going to finance these different development, then that's really where you should be starting off, is looking at what is consistent with your nationally determined contributions and other climate agenda strategies. And finally, I think also important to say is that we don't want countries to be takers of policies, right? Many countries are already, for example, talking about carbon border taxes. And if you're a country thinking about how you will grow your agriculture, et cetera, you want to be thinking about how you're not going to be hit by these policies from other countries. So again, thinking about holistically upfront. And Fatouma, you know that in the bank, we offer a number of support for these diagnostics. Number one, we look at the growth path of an economy and work with countries about how this might be better for the climate and how they might address climate risks through the country climate diagnostics report. But we also follow this up with looking at the binding constraints for private investment in infrastructure through our infrastructure sector assessment programs. And maybe last but not least, and by no means at all not the least, because really the coordination of sector policies and practices at national level and thinking about PPP as a policy instrument is, I think, very helpful to this discussion of bringing infrastructure and climate goals aligned. So PPPs, I would say, is really a strong instrument of public policy, because within the PPP, really government dictates the kind of service, the price of service, who benefits from it, will it be a low carbon service or not. So the opportunity of directing investments into climate smart and equitable investment is there. The World Bank, through a number of instruments, PIAF, GIF, the IFC, as you know, we have these tools that we've developed to support countries to think about their PPP programs. And Gisele mentioned the toolkit. So maybe some of the things, a highlight of our prescription in these toolkits is that most of the time we decide the project and then think about how to mitigate risks later on. But what this toolkit is trying to do is to really advocate for embedding climate considerations throughout the PPP development cycle. So not leave it as an afterthought and rely more on adaptive planning rather than relying on high adaptive costs in developing your project. So I can, of course, go into detail a little bit of our prescriptions under the toolkit for a later round.
Thank you, Gemma. I hope we will have that opportunity later on. Thank you very much for this very thoughtful feedback on, how we can embed climate change considerations on the way, PPPs are structured and procured. Maybe let's switch a little bit and talk about urgency, but also about opportunity, because I think that is important in terms of crisis to keep hope. So I would like to turn now to Andrew. Andrew, given the urgency of climate pressures and the need to stimulate the economy, where are the opportunities and challenges for shovel-ready shifts to low-carbon infrastructure? And I think that relates to some of the questions that were raised earlier. So over to you, Andrew.
Yeah, hi. Thanks, Fatouma, and very glad to be here and to be part of this discussion today. I think we already knew sort of pre-pandemic that there was significant investment needed in infrastructure in all economies to meet the sort of increasing demand. And we were already seeing developments towards a greener, more resilient and inclusive projects. Now, whilst the pandemic delayed many projects and decisions, I think it's also accelerated the move towards better climate smart infrastructure and PPPs, which are there to assist countries meet their SDGs and NDCs, all as part of the Paris Agreement. But also because of COVID and because of the pandemic, governments are now more fiscally constrained and so are looking for ways to boost economic activity. And as we know, infrastructure is a very effective means to do this. So I think this brings opportunities for PPPs. They're a very useful framework for public and private partners to pool financial and technical resources more efficiently. Clearly, climate changes those challenges as it brings novel forms of risk, uncertainty, and difficulties in qualifying effects. And so there's problems clearly with risk allocation and costings for that. During the pandemic, there was a clear decline in project activity, particularly in areas such as the transport sector. But other sectors such as renewable energy, telecoms, broadband, digital infrastructure remained very active. So, it's clear that things like renewables, solar, wind, etc., and storage technology is going to provide a clear path towards a lower carbon infrastructure. And there are definite opportunities there for investors and contractors. But I suppose the question really is about what about other sectors, the traditional sort of transport sectors such as airports, roads and rail. And I think here the key is looking at a sort of balance, particularly in possibly developing economies where there may be a more acute demand for such traditional infrastructure. Now, a number of PPP projects were already proceeding with ways to reduce or mitigate the effects of carbon-intensive construction and operations. So use of different construction methods, materials, better design, and better forecasting of climate risks have all been employed. And it may be that in certain projects, there can be changes that can be adopted to allow a quicker procurement in a better and greener way. But the balance for these and all of them will be to ensure that they continue to meet the increased scrutiny that's there from regulators, investors and funders. And other projects may need a more significant change in the way that they're planned and procured. But in all, it's probably better to have a quality procurement than it is to have sort of quick wins.
Thank you, Andrew. Quick wins, that brings also challenges when it comes to risks and how we manage risks and define mitigation strategies and really have a forward look when it comes to PPPs. So I think that's a good transition to our second round of questions, because the massive capital requirements and the need for innovation in climate infrastructure is really important. And that raises a question about how PPPs are placed to help in implementation. So the question that I would like to ask you, Andrew, since you have the microphone, is really to tell us, what does one do to take climate into consideration, given the long-term nature of PPP contracts, which inherently bring uncertainty?
Yeah, thanks. I think I seem to be getting quite a bit of feedback here. I'll carry on. PPPs, I think, have got a significant role to play in helping address this infrastructure gap that exists and deliver on climate change requirements. Governments clearly have a key role to play in analysing the climate resilient policies and priorities that need to be adapted and will bear the ultimate authority and accountability here, but the private sector can clearly be looked at to bring innovation side, the technology, funding and efficiencies to help bridge that infrastructure gap in a sort of better and cleaner way. In respect of embedding climate considerations into PPPs, this really needs to happen at all stages of the PPP life cycle, from identification to tender to contract management. And ideally, it needs to be enshrined in the country's PPP policy and framework. Firstly, there needs to be a proper identification of government policy and priorities to meet the national and international commitments. And projects then need to be identified that will help promote these policies. As part of any sort of PPP appraisal process, it's very important there's a full technical, commercial, and financial analysis is properly undertaken. And that will now involve a sort of fuller review of climate risk screening, forecasting, and analysis. Part of this will all identify risks and vulnerabilities, and they all need to be looked at, and there'll have to be ways to mitigate those risks and deliver built-in resilience. As has been mentioned earlier, I think a very important point is to be consultative and collaborative, so consultation with stakeholders, experts, and also the market really to test viability. And climate considerations can be factored into all stages, can certainly form part of the design and operational specifications for projects, can be a requirement for required standards and outputs for projects, and can form part of the tender requirements and evaluation criteria for awarding projects. I think also in the PPP contract itself, there are various mechanisms that can be used and that can assist with risk allocation and helping with these uncertainties and climate considerations. So the payment and revenue regimes can bring forward appropriate incentives, can also have express contract provisions which can deal with known sensitivities and provide guarantees where there are certain uncertainties. Clearly, provisions such as force majeure, which I think there was a question that has been asked about that, and a pretty fair question as well, need to be looked at and strengthened along with sort of ancillary provisions such as MAGA and change in law. And then there's clearly important provisions to be built in to do with insurances and financial re-equilibrium if that's required as well. And I think that another key area as well is in contract management, where there should be more regular use of reporting, sort of planning and adaptation to deal with climate considerations. So I think, as ever, well-planned, well-structured and procured PPPs can certainly help deliver better, greener and more resilient infrastructure.
Thank you, Andrew. This is very insightful and provide really, the perspective of infrastructure sectors in general, and that is quite important. But I think it's also an opportunity maybe to dive into one particular sector, and I would like to invite Ousmane to really share his views on the same question actually. But look at the energy side of the equation, especially when it comes to the demand and supply side of energy. So over to you, Ousmane.
Thank you, Fatouma. Good day, everyone. In fact, there are two sides of the question regarding how to go green and how to decarbonize the economy. You have the supply side with the decarbonization of energy production, and you also have the demand side. And I talk about energy efficiency, in fact. This is a good way to optimize the energy consumption and to reduce the carbonization of the economy overall. And when you think about quick solutions to be put in place to switch to this green economy, you think about hydrogen, etc., but it will be on the long run. On the short term, we have levies, especially regarding energy consumptions of buildings, for instance. And in France, not later than 3 months ago, we advised a large building company who entered into a concession contract with the Ministry of Armies to rehabilitate and build new dwellings for militaries with energy efficiency at the center of this concession contract. It's a very huge contract which will span over 35 years and will bring 7 billion of revenues, and we have raised 1.3 billion euros of debt for this project. And it's really a way to reduce, optimize the consumption of carbonized energy, and it should be put at the center of decisions when the reflection around PPP is made on various countries. You of course have you have in mind the energy production with the IPPs, which can be solar PV plus storage, CSP, hydropower, wind farms, etc. But it should be also taken into account that the usage of this energy is key regarding the overall decarbonization process of the economy and the world.
Thank you very much, Ousmane. I would like to challenge you a little bit on this, and really, besides the timeline and the demand side and supply side of energy and how we can bring innovation. We know that despite the gains made in climate smart technology recently in the energy sector, there are high real and perceived risk in the implementation of PPPs. So I would really want to mention that, and the risk matrix has changed. So the risk is exacerbated in times of crisis. So that is a given. So I would like to ask you, what are some ways to mitigate and control for risks that lead to significant capital premiums and high financing costs?
Yeah, thank you, Fatouma, for this question. And when I'm working on several IPP transactions right now, not only on solar PV projects, but also on hydro projects and on storage projects. And today you have a really big challenge regarding EPC prices. You cannot have prices fixed for more than 30 days, and sometimes and more often you are asked to pay upfront almost the whole EPC price. For instance, in a recent solar project, an EPC asked the IPP to pay 80% of the EPC price upfront, and this is really a really big challenge in PPPs, and especially in the energy sector, regarding the timing of these projects. You are asked to bid one day. There is evaluation process that can last many months. There is also a negotiation process that can last also many months, and at the end, the prices are not the same as in the beginning, and it is not well taken into account in PPAs today, how to reflect the increase in prices, especially regarding EPC. For more than a decade, we have seen a decrease and constant decrease in prices. So it was not a problem, because in fact, the more the tender process lasts, the more the return is higher for the IPP, as the IPP bid with a price at a certain time, and a year after, they were quite sure that the prices should be lower. It's not the case anymore, and in parallel, you have an increasing cost of capital with higher interest rates, and in the same way, we have to put that into account, to take that into account in the pricing of these PPAs, because in the same way, you bid at a certain time, and a year after, or even 2 or 3 months after, the interest rates are not the same, and you are not able to swap your interest rate before you have a deal and you reach financial close. And it will also have an impact in PPA prices. These are two main questions, two main risks that should be taken into account, more and more taken into account in these PPAs, to ensure another risk balance, another risk sharing mechanism between the off-taker and the IPP. It seems lost Fatouma.
Gemma, would you like to, or Imad?
Gemma, perhaps we can move to the next question, and happy to have us both try to tackle that as well. Did you want to share out?
Sure, I can. But thanks again, Ousmane, for a very interesting insight on how quickly things are moving with regards to PPPs nowadays and the changes in cost of prices. Gisele, any thoughts from you on whether this particular issue or the broader, support to countries on bringing climate and these new emerging issues into mind when thinking through their PPP transactions from multilateral agencies and development partners?
Sure. Gemma, thank you. And I guess just to restate, I mean, the World Bank Group is playing an important role in advancing the climate agenda, from upstream enabling legal and policy frameworks, the advisory work that we do with public sector clients, and also the financing of projects that we do, bringing in private sector. And I think what's really been critical is creating these new tools like the PPP Climate Toolkit that I mentioned earlier, is really critical to kind of unlocking opportunities and helping pave a pathway forward. But we're also introducing other tools, for example, the EDGE Green Building certification or the APEX tools for city climate planning. And these are just a few examples of things that are coming out and are critical tools in our toolbox as well to help advise. And I believe we can and are shaping things like new taxonomies and helping to create transparent level playing field in areas of new development. And I mentioned areas like carbon credits and carbon markets, or spurring new technology. We're hearing a lot about green hydrogen, for example, just like we were hearing about renewables, solar and wind when they were very nascent technologies. And I really do hope that we can help catalyze investment and financing with all of this work that we are doing. I think financing for both mitigation of greenhouse gases and adaptation are critical components. It's not one or the other. And building infrastructure assets of the future, I think we're going to need to take both of these aspects into account. Building assets not just that deal with the greenhouse gases, but also can really address the climate resilience to withstand climate impacts that we're already seeing globally, causing so much devastation. We don't want to build an asset to have it be partially or totally destroyed a year or two later. Clearly, that's not in anyone's interest. And we are really, to some of the points that Andrew was making earlier as well, we're trying to work to embed climate considerations early on in PPP structuring, to consider design options that build in climate resilience, that do also capture GHG emissions reductions opportunities. Also looking at incorporating climate KPIs, building in from the market, and adding requirements. For example, I mentioned green building certifications, adding those certification requirements in that help build energy and resource efficiencies into infrastructure and social sectors in PPPs. This change really helps to enhance the ability of the PPP asset to also tap into climate and sustainable finance market that really bolsters the issue of bankability that we keep hearing and discussing. And with a 1.6 trillion market out there in climate and sustainable finance, that's the market we want to be able to tap into. Investors are also looking to invest in assets that address climate change, balancing kind of the risk and reward. We've talked earlier about some of the regulation, some of the commitments that these corporations are making to net zero, et cetera. Their shareholders are really demanding a shift. And undoubtedly, I think PPPs and the structuring will need attention, and for us to be attentive to kind of the ongoing evolution, which we're likely to see in areas like Andrew mentioned, force majeure. I would also table things like insurance as well, and other critical aspects of PPPs. All of this field is rapidly evolving, and we will need to really adapt along with it. It's all about, I think, decision-making and uncertainty as well. And I think as part of the World Bank Group Climate Action Plan, we certainly are supporting these decarbonization pathways, and they're critical to, I think, achieving the Paris Agreement goals. So I think these are critical aspects to framing. Gemma, I don't know if you'd like to add as well further aspects here.
No, well, maybe a couple more things to add in terms of what MDBs do. And we already mentioned that ourselves, we made a commitment as a financing institution to 100% align with the Paris Agreement. And so next year, in fact, our operational commitments within the World Bank is trying to align to these different commitments under the Paris Agreement. And this goes beyond our own targets for also ensuring co-benefits, climate co-benefits coming out of the projects we finance. So we've also increased those targets from 28% of our commitments to 35% of our commitments. Maybe a couple of things to say about, we spoke about policy alignment and the support that can be provided by multilateral development banks. If I think about COVID in 2020, 2021, interestingly, Africa, for example, in 2020 posted a number of actually growth in PPPs, and that was thanks to projects they were preparing pre-COVID, right before COVID, which managed to find financing in 2020. And all 15 of those sub-Saharan African countries that managed to bring a PPP to market that year benefited from PIAF support on their legal enabling framework. And one of the big lessons that we have in this case is, you need to be prepared all throughout the time, right? It's not like you're just preparing now, you have a crisis now, and you're relying on a crisis response committee. You have to be preparing for crisis all throughout the periods before. And that might go to some of Ousmane's point, right? Like you're not coming to the negotiation if your government and you're not prepared to come to the negotiation table and drag it out, then there's even greater risk on price changing in the very volatile environment. And then number 3, you will see, I hope, and I think you do already, that many multilateral development banks are now becoming, if you like, almost arrangers, like super arrangers for client countries. And what do I mean by that is that we're offering more and more intermediation services using our own balance sheet to help countries access capital markets. So we're standing in between the client countries. So for example, Treasury Department of the World Bank offers a platform on the multi-catastrophic bond program, which they issue bonds to country on behalf of countries, which then use the proceeds for contingency funds, and then they make a payout where some of the events meet the thresholds. For example, so they release proceeds for these bonds, and so bondholders agree that their principal does not get returned in the case of this, but there's premium that's being paid throughout this bond. So that can only work because there is a third party like the World Bank who is trusted by the very different stakeholders. So what we know in the coming years is that just PPPs become more complex because of multiple stakeholders, many more legal documents that need to be looked at. And of course, the complexity of climate modeling and disaster modeling itself and sort of predicting where it will go. And so having an institution that brings its own credibility in between capital markets and borrowers, client countries, is very helpful. So I won't try to commit all of the World Bank to that, but certainly you see that from specific programs that we have launched, as for example, this multi-catastrophic bond program that's available.
And Gemma, if I can, let me jump in because it's interesting. We're doing that with the World Bank Treasury, but we're also seeing IFC jump in and be a critical anchor for private sector companies that are going into PPPs and other types of forms. For example, in Asia, we had SemCorp, where we did climate anchored, the first sustainability linked bond, raising 675 million. And really kind of marking the next phase to that company's transition to net zero. We've also provided sustainability loan to Corsan, a water sanitation company in Brazil, again, enabling them to reduce losses in water distribution systems and boost energy efficiency. These are just a couple of examples of how we're also helping to anchor and boost financing, both on capital markets and through loans to really kind of drive the financing and bring in private sector solutions.
I want to make sure that Fatouma, I think she's trying to speak. No, we cannot hear you, Fatouma. Okay.
Okay, she's saying she's going to restart, but Jyoti, how much time do we have to answer questions?
So we have 26 minutes left, and you can see there's a lot of questions.
Yes, perfect.
So if you want me to highlight something on the stage, then you let me know.
Okay, well, I guess we start from the beginning. We received questions from the Ministry of Finance in Jordan about maybe revisiting the force majeure contracts and maybe having an international standard. And I can make a small, my own personal opinion as also a lawyer and a practitioner, but I also will defer to Andrew to tell me that I'm not right. But really to say that, well, thinking about force majeure, there's a couple of requirements, right? So it prevents the parties from performing obligations that are in the contract, which I think is very important, that it was not reasonable to predict these events, and that there is the losses or the prevention of these obligations is not due to the negligence of the parties. And maybe a force fourth requirement sometimes is that they did everything within their reasonable ability to do to prevent loss. So my sense of this is, and when we think about the climate toolkit, when we say embed climate within the whole of the PPP cycle, I do mean that, because you do want to think about what are the obligations and opportunities to bring climate services within the project. So I think Ousmane and Andrew talked about this. In terms of climate mitigation, you'd like to think about, well, are there opportunities for the project itself to lower greenhouse gas emissions, whether through the direct service it provides, through the indirect use of energy, so the efficiency, or through the value chain, or how I think Andrew talked about construction modalities that are less carbon intensive, for example. You might want to bring that into the contract as an obligation, and therefore it is part of then these clauses. The second question there would be how much is it reasonably predictable or not? So again, we are seeing contracts today bring in more parametric performance indicators. So there's a range of the indicators, and whether they fall in and outside the range, there are certain commitments to the sponsor. So it's no longer black and white. And sometimes you might have different step-ups. First, this is sponsor risk, and then it may transfer to public sector risk, etc., because of these parametric KPIs. So that's another thing you can do within these clauses. But let me hand to Andrew.
Hi, yeah, thanks. Not sure if you can hear me okay. I seem to be having a bit of difficulty. Anyway, while I'm still online, yeah, force majeure, an interesting one, certainly over COVID and through the pandemic, different countries treated it differently. So places like Brazil, I think, were quite early in recognizing the pandemic as a force majeure event and gave relief accordingly, whereas UK took the opposite route and said that it definitely wasn't force majeure. So, it just shows that the different aspects that can apply there. Now, part of that is also because of the way that countries deal with force majeure, and some jurisdictions have an inbuilt mechanism that's force majeure, and so there's a certain restriction on the freedom to contract or have specific clauses dealing with force majeure, whereas in UK or other jurisdictions, you can have the freedom to set out exactly what you mean by force majeure. And there have been, different approaches there to having either just force majeure as the kind of open-ended, it's anything that's beyond reasonable control, or to having, on the other aspect, a list of specific events that will count towards force majeure. So that it is then clear by all the parties and what you mean by that. Now, as a kind of a lawyer, I guess you'd expect me to say that clarity is better in that respect. And I think we're certainly seeing contracting parties now are looking to build in aspects, so particularly things like pandemics, epidemics, and COVID that weren't specifically dealt with in force majeure provisions before, now trying to look for the clause to deal with those or recognize them. That's not being put in all contracts, and in various places governments are just sticking with the general clause. But I think people are looking for certainty, particularly when we're looking at things like foreseeability, and we know that COVID may reappear or other things. So people are asking for specific provisions to be in the contract, not necessarily giving all sort of compensation, but certainly dealing with the effects that it might have on, supply chain or operations, and limited to reliefs to penalties that might be applied during that period. So yeah, I think the question of whether we'd want a standardized force majeure clause, ideally yes, but I don't think that's practical because of the way that different jurisdictions approach matters. But to be clear on, be as clear as possible, I think, on allocating the risks and saying what you mean by the various events is what you'd really want to have in the contracts.
Thanks, Andrew, and spoken like a true lawyer. We have a question on airports, and I wanted to check if any one of our panelists is comfortable responding to this airport question, which is not only in French, but I do believe the understanding is, because of COVID, it was badly affected as one of the sectors. At that time, there was no compensation mechanism, so people didn't know how to deal with the shocks in the traffic demand risk that sponsors took, and what could be the mechanisms for the future. So I wonder if there's any of our panelists that was interested or had some insights to the airport sector. Or perhaps an analogy from a different sector. Ousmane, is this something you're comfortable? Yeah, please.
I can talk about this one. I think it's also linked to the notion of force majeure, and I'm sure that in the new contracts, not only in the airport sector, but in many, if not all sectors, this kind of pandemics, this kind of adverse situation will be and are taken into account in a different way. Regarding especially airports, you had a lot of privatization, concession agreements put in place in this sector all around the world, especially not only in Europe, in fact, in many, many continents. And you could have some kind of traffic guarantees put in place by the public authorities to ensure yes, a minimum gains for the private partner. And it should be, it's already put in place in some airports where the traffic is not enough to allow the private partner to have a decent profitability on its investment. And you have a notion of public services. But even for airports where you have sufficient traffic and that the traffic risks can be borne by the private partner, I'm sure that in the coming years you will see more and more clauses in contracts, in concession contracts, where you have yes, a traffic guarantee in case of pandemics or any other very negative macroeconomic impact in the project, on the project.
Right, and I do think, and one of the comments to this question too, coming from our audience, Patricia, who is a lawyer from the World Bank, also made the comment, a good point, to reemphasize the point of foreseeability, right? So I guess the pandemic is really being treated as unforeseeable, and so it's not always the case that there is need for compensation, depending on what's been written in the agreement. And pandemics certainly, at least at that stage, unforeseeable. What we have seen in the COVID response, where we work with the airports, a couple of things to say, and not to say this is the prescription, but this is what countries had done. So in one of the airports cases that we looked at actually the different options for how might compensation be made in case a claim was successfully made by the sponsors against the public sector on the basis of MAGA. And there were very clearly unrealistic scenarios. For example, extending the term of the contract would have extended it very, very long. And so we just sort of dropped that as an option altogether. I think in the end, what would have been the most viable were reductions in certain requirements. from the sponsors, and increase in the government allowing the increase in airport fees and tariffs that were being charged to the users, which I just flew, and every day you fly economy class is $9,000 these days. I guess that we're all sort of feeling that ourselves. Andrew or Gisele?
Gemma, I was a few different thoughts around that. I mean, I think what we might see more and more is discussions coming up around financial equilibrium. And those might not be for the life of the concession, but they may be temporary events to deal with pandemic, et cetera. So I think when we talk about decision-making and uncertainty, these are the things that we need to begin to be prepared. And so I believe dispute mechanisms will become more critical factors in our concession contracts. I also go back to perhaps less on the demand side, but more on the asset loss side. I go back into what we had stated earlier, which is designing options for climate resilience to withstand more typical FM events is going to be critical, so that you're not being taken out, a project isn't being taken out fully of commission, and that they're not suffering massive losses, but they've made the investment upfront in CapEx. They may also need to make continual OpEx shifts to address climate resilience over the life of the concession as well. So these are some shifts that begin to touch on FM, begin to touch on insurance coverage, et cetera, that I think are really being driven by climate impact and change around us. Just some thoughts to add.
All right. I'm being told we have about maybe 10 minutes and then a wrap up. But we can maybe take another or two questions, one that received upvotes. So viability assessments for climate change related projects, which could be brand new for many countries. And so that said, how the jurisdiction concerned choose the private sector to estimate VFM. So I'm assuming that means what are the different options or scenarios, or how do you do, first of all, maybe to simplify the question is, in such kind of an environment, how do you do a VFM at all? And Gisele, I think some of this was covered in the climate toolkit. If you want to address that, and maybe we can ask one of our other panelists for any practical thoughts on this.
Again, I think when we mentioned embedding climate very early on, you need to do the analysis of different climate scenarios. And all of those are going to be embedded in design options, resilience options that need to be financially modeled to really look at the viability of the project. Otherwise, you're back at the drawing table to relook at what do we need to bring in. Are there other options that will need to be addressed, like blended finance, et cetera, to make a project viable? So different considerations. I'm just going to touch on that briefly here, and perhaps some others might be able to, Ousmane or Andrew.
Thanks, Gisele. So Ousmane or Andrew, is there a comment you would like to make on this point about conducting VFM analysis in deep uncertainty?
In fact, even before pandemics, conducting public sector cooperation and value for money analysis was quite difficult. You could have many approaches, which can be qualitative approaches or quantitative approaches with many variables, with Monte Carlo analysis, etc. But at some point, I think there is a need for a public willingness to enter in a PPP contract with a private partner, with the strong belief that it will be the best way to deliver a given infrastructure. It is comfortable to have figures to conduct and to have figures to be presented to stakeholders and to decisionaires. But from my own perspective and from experience, it's really it's an exercise which is quite hard to make, and with too many variables, too many choices to have something very robust at the end. It should be, and it has to be part of the decision-making process, but it's not the only thing you have to rely on when deciding to enter in a PPP.
Definitely. I think that's an important point, although truly it is a fair question about even trying to muster the information about how might the public sector comparator compare with a private sector comparator performance under climate risk scenarios. And so it's a good food for thought. Thank you for that question. It might just be the subject matter of a knowledge product from PF soon.
Gemma, let me jump in. One other thing to think about as well. I mean, site selection has never been so critical with climate change, and to look at it through a climate lens, one point. I think there's also different other variables that we need to begin to crowd in more, like nature-based solutions in addressing climate resilience, because they're cost effective. As well. And then a third element, which I think is coming up more and more, the idea of being able to monetize things like carbon credits and create new cash flows and revenue streams that might make a project much more viable. These are things that are beginning to come to play, I think are really central to our structuring and advising on bankable, viable PPPs as well.
Great. Andrew, any last thoughts? I think we are coming to the time.
Yeah, I was just picking up on the bit there about the sort of VFM. Now, there's multiple ways to actually calculate that, but one of the sort of important lessons I think that we've got is to make sure that all the risks are being properly identified, sort of measured and allocated when you're looking at VFM. Because there tends to be, or there has in the past, I think certain risks have not been properly identified and they've not been taken into account when forecasting potential contingent liabilities for governments. And so there's certain things that might be coming home now where the costs of previous PPPs are maybe more expensive than originally thought, or there have been liabilities that have now come or have been claimed that weren't expected beforehand, that clearly wouldn't have been part of an original VFM analysis. So I think there's a lot more, and we've talked about them, toolkits and help that is available to have a full and thorough analysis of the potential risks that might be involved in a PPP, and to make sure that those are then properly costed and allocated in the contract as well, so that you've got a sort of full VFM analysis to appraise and approve the projects on.
Thanks, Andrew.
Gemma, can I just show one more question? And specifically on guarantee mechanism, but I think we can, if you want to expand to other financing mechanisms as well.
Sure. And Jyoti, again, sorry to ask, how many more minutes do we have?
We have exactly 5 minutes, so very quick response to this question.
So any one of our panelists interested to addressing the question?
I suppose I can pick up quickly on sort of guarantee mechanisms in PPPs. I mean, I suppose you've got the difference between sort of availability-based PPPs and user pay PPPs. Now, in user pay, where it's dependent on demand risk particularly, there may well be underlying guarantees of minimum revenue or minimum demand guarantees, or particular offtake guarantees that were given by governments. So it's particularly to ensure that projects were kind of banked and were viable. And so I think these kind of mechanisms, if they exist in contracts, will have been enacted, particularly during COVID and period, to make sure that there is some minimum protection for revenue where there had been a significant drop-off on it. And I think if there is a continuation with user and not a further shift towards availability-based provisions, then it might be that these minimum guarantees are looked at as well for safeguarding for investors going forward.
Thanks. Gisele, Ousmane, any last thoughts on this point?
We talk about economic and financial equilibrium of PPP contracts. I think it could be a way to handle that. And as said by Gisele, I think we need to include, and in many contracts it's already the case, that a yearly or even a quarterly management of these contracts to have a quick response in case of unforeseen cases. We already talked about force majeure, etc. But at the end, the main goal is to have these projects working, and we need to avoid the bankruptcy of private partners, because it will be the worst case scenario to have an infrastructure not operated, there is a trade to be made on the interest of the public party, and also the interest of the communities to have a properly working infrastructure, even if the demand is not as high as expected due to external circumstances.
Thank you. Gisele, any last point from you before we close?
I think we've really touched on all of these critical aspects of the importance of really embedding climate change, both mitigation and adaptation, climate resilience early on and throughout the PPP life cycle, but certainly in our earlier stages of thinking through what is a viable, bankable project. And that needs to be fed through with a first start of consideration around the Paris Agreement and NDC considerations of that particular country as well. So I'd like to tout the climate toolkit that we put together. It's a wonderful tool to really help guide us all, governments, advisors alike, in a modular format to really embed these considerations throughout the PPP life cycle up through tendering. Would encourage you all to take a look. We're very happy and excited to be sharing that with all of you.
Thanks, Gisele. And also just to mention a couple of the references that were cited today by Imad on the practice notes for COVID. They're available as well online through the PPP website. And apologies that really we're having trouble with the sound. I'm sure Fatouma would have done a better job at moderating and closing this session. I will try to channel Fatouma's thoughts in this closing session. First of all, just to thank our speakers, but also the very lively discussions in the chat. A couple of the points that we raised today. First of all, preparedness and embedding. Don't come to the game too late with thinking about these potential different scenarios and different risks. But when you are at that stage, then having good sponsors, therefore good processes, right? Good procurement processes, select on the basis of strong partners rather than just short-term gains. Build into the contract clarity, but also flexibility, I would say, was another theme today. And finally, look for help. Reach out to any of the numbers of MDBs that are here in the WAPP session, the WAPP Association itself, but certainly the World Bank Group for a number of the support to the countries, which we are always happy to provide and very privileged to provide, in fact. So again, thank you very much to all the participants and to the World Association of PPPs for launching the very successful event. Congratulations. And also for hosting our little session today. Thank you all.
Thank you all.
Thank you, everyone.
Bye-bye.